Hi guys, I welcome you in this wonderful video. So in this video, I'm going to be talking about the unpredictability of the V75 market. We know that the way this market is behaving, it's uncertain, meaning sometimes you can predict or try to take advantage of a move, and then all of a sudden that move changes direction. For an example, let's say here you were anticipating an uptrend. You've been buying, and then all of a sudden it goes down, and when you begin to sell, all of a sudden it begins to go up. Same thing applies. Let's say you find this high momentum trend, because we can see that here the trend have shifted in terms of strength. Started in a weaker pace, and then all of a sudden it accelerated into a more stronger uptrend. Let's say then you try to take advantage of this upward move, which was so aggressively, and then all of a sudden from nowhere, then the market begins to collapse against you. So that's what I'm talking about, and that's what this video is tailored for. So we're gonna be dealing with that, how to actually survive such unexpected move or such surprising behaviors, which usually causes us to lose our capital. So for an example, let's take a look deeper into this behavior here. Let me just erase everything. We can see that, okay, from now we can look at this as a little bit of a down move from here, because you can see that here was our low here, and here was our next low, then here was our next high. So because of this high, which is lower than the previous one, then it means that the sellers were coming in, and again this was a more further confirmation with this lower low. So then when you are to take a decision as a trader, or when you are to take a decision as a sell, so one thing that I always encourage traders, or what I'm gonna encourage you to do, is that what you see here, you shouldn't take a decision based on it. Now, for an example, I'm on the 1 hour. So this is gonna help you in terms of navigating through time frames. Make sure that your main or your primary analysis takes place in a hard time frame when it comes to V75. On currencies, you can do all the other multi time frame analysis, but here you can do it as well, but you must know that your primary analysis should take place on the hard time frame. We know that in other instrument on the hard time frame, we look for key levels. For an example, we look for support or resistance in the direction of the market. So even here, you should look at where the market is and actually do your analysis into details. For an example, let's say here you want to take a decision. You observe this corrective wave going up, and you observe that it is moving in a manner of a channel. For you to take a decision, so for you to survive uncertainty, you need to look at the market in a narrow perspective. Avoid predicting the market for the longer term. Meaning, for you to take advantage of the move here, the move that was gonna come, in this case this move, you have to go and look at this, or you have to go and take your decision in a lower time frame. Do your analysis in the high time frame, and then go and take a decision in the lower time frame. Why is that? Because the moment you take a decision here, you will know and you will observe that when the market is about to turn against you, you will be aware, and it will be easily visible in your eyes. For an example, let's say you take the sell from this breakout here, or maybe from this retest of this breakout here. Let's say you take your decision here. It will be easy for you to observe when the market is about to reverse. For an example, the market will move down and then come all the way back up. The size of this wave will raise awareness into you. Let's say maybe you don't, you just keep on you allow your trade to continue to run. This behavior of this wave is also going to communicate to you, because the behavior of this wave is now weaker compared to the previous behavior of the previous wave. So this is going to communicate to you. It is clearly visible here, but on the hard time frame, you couldn't easily observe when the market was about to reverse. However, you observed clearly that the market is gonna move impulsively. That's why I say you should analyze primary on the hard time frame for your entries. But when you are about to exit your trades, make sure that you look at these smaller time frames, because those are the smaller time frames that are gonna give you clear signs of a decline in strength or a decline in momentum. So when the strength of the sellers is declining, you will clearly see it on the lower time frame compared to the high time frame. For an example here, you could spot it with this wave, or you could spot it with this impulsive wave, which was a little bit weaker, and this low also confirms, because you can see that it's a little bit higher than the previous one. So it's a confirmation that, okay, now the market is delaying, so you can easily and quickly cut your profits all the way here, if maybe you fail to cut them earlier. So you could cut them all the way here and be safe on that way. And moreover, when you take a decision on the smaller time frame, meaning you are a little bit of a scalper, it becomes easier for you to make money. Why? Because maybe, let's say here, you're gonna maybe use a bigger lot size and so on. It's easy for you to make money because the market won't be surprising you with these opposing moves. Whereby in the hard time frame, this opposing move, it's hard to observe them at the early stage like this. You can observe them maybe all the way here, and you find that you break even, or maybe you end up closing losses up there. And moreover, avoid trying to trade multiple impulsive waves. For an example, let's say you enter here, when the market starts to reverse, don't try to wait for another impulsive move so that you take advantage. That's why I say you should look at the market in the eyes of a scalper in such a way that you don't get caught into the surprising behavior of this instrument. So you should close your profits and then reanalyze again. A clear example is this wave here. Let's say you detected this and you enter here on the breakout, and then when the market begins to go up, you should begin to close your trades here. And then as it is going up, reanalyze again and then enter again and let the market go down, and starting to go up, close your trade and reanalyze again, and then take again another decision on the breakout down there. So that's how you should do it. Don't be afraid of jumping in and jumping out, because this is for the sake of the protection of your account, or the safety of your account. Because if you're gonna say, I am gonna wait for the market to come back up and then I will allow my trades to continue to run so that I will take advantage of the next move, it might happen that the market will go up and never come back. So you should make sure that you are alert and you are aware in terms of these surprising moves. So that's it, guys, for this video. Thank you for watching.